What happens when a group of Japanese housewives takes on global finance? It's a story that's both jaw-dropping and inspiring. In this video, we'll unravel the incredible journey of these savvy homemakers who managed to earn a mind-boggling $280 billion. How did these Japanese housewives outsmart global finance and amass billions of dollars? And how did they wield their influence over the Japanese economy for decades? In July 1999, amidst the frenzy of the approaching new millennium and the dot-com bubble, Japan quietly witnessed a financial revolution that would eventually rock global finance. This transformation was driven by a group of ordinary Japanese housewives known as Mrs. Watanabe. They embarked on a journey to trade currencies from the comfort of their homes, challenging the dominance of Wall Street tycoons and international banking giants. The story begins with Japan's economic bubble in the late 1980s, where the nation's real estate and stock markets were soaring. However, this boom was short-lived, and by the 1990s, Japan's economy was in crisis. The Bank of Japan sought to revive the economy by lowering interest rates, but regular savers found their returns in Japanese banks unsatisfactory. So how did these housewives earn billions of dollars? Enter Mrs. Watanabe, who, frustrated with the meager returns on their savings, delved into the world of foreign exchange, forex, trading. They initiated a clever financial maneuver called the carry trade. In this strategy, they borrowed Japanese yen at low interest rates and invested it in currencies with higher interest rates, effectively profiting from the interest rate differential. Mrs. Watanabe's success in the carry trade soon attracted thousands of Japanese housewives to join the trend. Nevertheless, in 1998, the Russian financial crisis struck, causing a surge in the Japanese yen's value. This sudden currency appreciation led to losses for Mrs. Watanabe and others, highlighting the risks involved in their strategy. But they had no idea what was coming next. The Bank of Japan introduced quantitative easing, QE, in 2001 to combat deflation. QE involves creating new money to purchase government bonds, thereby increasing money supply and lowering interest rates further. This move had mixed consequences for Mrs. Watanabe. It raised the profit potential of the carry trade but also heightened the risks. Despite the risks, Japanese housewives continued to venture into online currency trading around 2005, propelling the term Mrs. Watanabe into global recognition. Their resilience and determination to improve their family finances from their kitchen tables marked a unique chapter in the history of global finance. In the mid-2000s, the typical Mrs. Watanabe, a term referring to Japanese homemakers, was in her mid-30s, technologically savvy, and often engaged in forex trading. These amateur currency speculators ventured into online currency trading, using their own savings or borrowed money through margin accounts. They were attracted to forex trading because it was relatively easy for beginners. The media dubbed them the real housewives of Japan, and they collectively became a powerful force in the financial markets, impacting prices and catching the attention of hedge funds and banks. But how did these housewives make their billions? Their strategy involved borrowing from countries with low exchange rates and investing in countries with high exchange rates, such as the Australian and US dollars. This carry trade strategy remained profitable despite warnings from financial experts. But something unexpected happened. In 2008, the global financial crisis hit, starting with the collapse of Lehman Brothers in the United States. Investors worldwide sought safety in the Japanese yen, causing its value to rise. Mrs. Watanabe and others faced significant losses as carry trades unraveled rapidly. In the aftermath of the crisis, Mrs. Watanabe and other Japanese retail investors turned to day trading. They harnessed their financial autonomy to move markets and generate income. Day trading was on the rise due to improved technology and educational resources, providing fresh opportunities for investors like Mrs. Watanabe. This shift marked a broader trend not only in Japan but also globally, with retail investors taking a more active role in financial markets. In 2013, Japan faced a critical economic juncture with a staggering national debt to GDP ratio of 230%, the highest among developed nations. To combat persistent deflation and economic stagnation, Prime Minister Shinzo Abe initiated Abenomics. This multifaceted plan had two main components: monetary stimulus and fiscal stimulus. Firstly, the Bank of Japan was tasked with printing more money to combat deflation until a 2% inflation rate was achieved. Secondly, the government allocated significant funds to sectors like education, healthcare, and infrastructure to stimulate job creation and business growth. Initially, Abenomics appeared successful as Japan's stock market. The Nikkei surged by 30% in the first 3 months. However, by late May 2013, it suffered a substantial setback, leading to concerns that Mrs. Watanabe, a significant retail investor, might be cashing out profits, affecting the market. But Mrs. Watanabe made a smart move. Mrs. Watanabe's behavior was closely monitored as more than half of Japanese household assets were held in cash and bank deposits. A logical choice in a deflationary environment where money gains value over time. If Abenomics succeeded in creating inflation, it was hoped that Mrs. Watanabe would start spending, benefiting local businesses and job creation. Additionally, low interest rates might entice her back into the stock market. Japan's economic significance on the global stage meant that Mrs. Watanabe's financial decisions had repercussions beyond its borders. Her story underscores the influence of ordinary individuals on financial markets and the evolving landscape of retail trading.